right? So they are simply using the cheap money available in this incredibly overinflated, indebted world of finance to borrow cheap to buy Bitcoin. And the average rate of Bitcoin appreciation over the past 5 or 6 years is, 50% a year. So even if you're paying, 6 or 7%, you're making an incredible spread on the arbitrage. And of course, they're borrowing at a lot less than that. They're borrowing close to 0%.
Hey guys, welcome to Everyday Finance. Though not in the euphoric direction that many are hoping for, Bitcoin may be about to undergo a significant change. A more sobering short-term reality may be emerging, despite the general optimism in the crypto community. Marcus Thielen, head of research at 10x Research, believes that Bitcoin might be about to enter a long, agonizing consolidation phase that will be characterized by grinding stagnation and unpredictability rather than spectacular gains. This pessimistic prediction runs counter to the optimistic outlook that has taken hold as traders eagerly anticipate June. Many predict that Bitcoin will soon surpass its previous peak of $73,679, which was reached in March 2024. In stark contrast to the euphoric highs of early 2024, the current price action of Bitcoin presents a very different picture, with the cryptocurrency stuck in a volatile range between $20,000 and $40,000. Political tensions have increased, especially after Donald Trump's surprising election impact, which has eroded investor confidence and fueled speculation. However, longtime Bitcoin supporter and financial analyst Max Keiser believes Bitcoin will rise to new heights. He predicts a tenfold increase to $850,000 in 5 years, putting Bitcoin's market cap above gold. Keiser believes Bitcoin will soon replace gold as the ultimate store of value due to its speed, lower transaction costs, and lack of middlemen. He believes Bitcoin is the future currency and gold is obsolete. He warns that waiting may cost you a once-in-a-lifetime financial opportunity. As the cryptocurrency community prepares for a long, frustrating stagnation or an explosive breakout, maximalist fervor and conservative analysis diverge. Volatility, speculation, and divisive forecasts will persist regardless of Bitcoin's direction. Let's watch the video ahead.
For somebody like a Michael Saylor, I don't know if you know the name Michael Saylor, but he runs a company called MicroStrategy, now called Strategy. And what they figured out is that in order to keep the stock market bubbly, the central bank took rates way low. As a matter of fact, they went basically to zero.
Interest rates, you mean?
Interest rates, yes. Yeah. And so what Michael Saylor did starting in 2020 was he had 100 million or so on the balance sheet of cash. And he figured out that even if he was getting 3 or 4 or 5% of interest rate at the bank, inflation was higher and he's got a negative return at the end of the year. So he's put all of his money into Bitcoin when it was approximately $10,000 per Bitcoin. And what he's been doing is, and the market capitalization of his entire company was roughly under $2 billion. And what Michael Saylor came up with an ingenious plan, because he's been selling his own stock into the market and selling his own debt into the market, which normally, if you're into economics or finance, you would say, well, that's dilutive and it'll make the stock price go down. But he's been using 100% of the proceeds to buy Bitcoin. So it's actually not dilutive, it's accretive. So now his company's worth almost $100 billion. And he's been buying Bitcoin. He now owns over 500,000 Bitcoin. They are going to try to buy 1 million Bitcoin. And so he's using the stock market to attack the stock market, if you will. It's called a speculative attack. We saw the same thing in the early 90s when George Soros broke the Bank of England. He borrowed money from the bank to destroy the bank. And he made $1 billion. So now Michael Saylor has taken that lesson on and made it 100 times bigger. He's using the stock market effectively to kill the stock market. Because if everyone and many everyday companies are announcing, we're doing the Saylor plan, which means that, like GameStop just announced a few days ago that they had $5 billion on their balance sheet doing nothing. They're going to now start buying Bitcoin. There's a company in Japan called Metaplanet that's been doing this now for over a year. They're the best performing stock in Japan. There are companies in South America now doing this, the Saylor Plan. They are using the tools of capitalism to kill capitalism, exactly as Marx predicted, right? So they are simply using the cheap money available in this incredibly overinflated, indebted world of finance to borrow cheap to buy Bitcoin. And the average rate of Bitcoin appreciation over the past 5 or 6 years is, 50% a year. So even if you're paying, 6 or 7%, you're making an incredible spread on the arbitrage. And of course, they're borrowing at a lot less than that. They're borrowing close to 0%. So that's the only good use of the stock market right now, are corporations using the market to fund their Bitcoin purchases. And we're seeing that happen in MicroStrategy stock. It's a very interesting stock. I would encourage your viewers who are stock traders to look at it more closely. I think you'll find it a very interesting story. And once again, this is not financial advice.
A thorough examination of past market trends indicates a strong correlation between Bitcoin and gold, indicating that the two commodities frequently experience rallies within 100 to 150 days of gold, hitting new all-time highs. Over the last 10 years, this pattern has surfaced time and time again, suggesting a possible predictive relationship between the two assets, especially during uncertain economic times. The most recent spike in gold prices, which reached a record $3,357 per ounce on April 17th, sparked new speculation that Bitcoin might be about to see another big rally. Since Bitcoin was trading at $84,925 at the time, not far from its own peak, market observers looked back at previous correlations. Gold rose 30% early in 2017, and Bitcoin reached $19,120 a few months later. Gold reached a new high of $2,075 in 2020 during the COVID-19 pandemic, just before Bitcoin began its legendary bull run to $69,000 in 2021. Both assets act as safe havens during inflation, dollar weakness, and geopolitical tension, which is a trend. Bitcoin's slower but more explosive move solidifies its position as digital gold. Gold usually leads. As investors lose faith in fiat systems, gold and Bitcoin become viable alternatives. Since gold is setting records again, historical data suggests Bitcoin may be ready for another upswing, consistent with its lag time trends. Due to economic instability and institutional interest in cryptocurrencies, many are watching how this plays out in the coming months. Max Keiser, a prominent Bitcoin supporter, believes another historic Bitcoin breakout is possible. Watch more clips.
Okay. No, you should just be buying Bitcoin. Again, if you have your retirement account and you want to outrun inflation, right? So inflation is something that is eating up your return. You want to outrun your inflation. Well, the stock market typically returns something like 7% a year. That's the average annual rate of return in the stock market. And inflation is really running a lot higher than 7%. The reported inflation is cherry picking numbers to make it a lot lower than it actually is. If you were to calculate inflation based on stuff that people actually buy, like healthcare and education and housing, the actual inflation rate is closer to 15%. So you have to make 15% a year in the stock market just to break even, which most people don't do that. Warren Buffett's annual rate of return is roughly 22, 23%. That's really the only thing Warren has delivered over the past 30 years of his career, which incidentally doesn't really beat the market by much at all. So there's the stock market's not really going to get you there. The bond market, well, we're at the end of a bond bull market that started in 1980 under Reagan, and it ran from 1980 to 2022. And the bond market rally that started in 1980 ended in 2022 when the Russia-Ukraine conflict kicked off. So the bond market's now entered into a bear market. It's in a protracted cyclical bear market. So the bond market's definitely not the place you want to be. So then there's gold. Well, gold's been acting great because it's an inflation hedge and it's going to keep up with inflation. If you want to maintain parity with inflation in retirement, gold will get you to that place where you're not getting eaten to death in your retirement by rising inflation, but it won't do better than inflation. Enter Bitcoin. Bitcoin will actually outpace inflation and outpace gold substantially. So you can actually increase your net worth even in retirement if you're not working, if your expenses are capped and not extravagant, and you're just letting Bitcoin compound at its very high rate of return as the world pours all of the available resources into Bitcoin. So Bitcoin should trade at parity to gold in terms of market capitalization, which means that it could easily go from 85,000 a coin to 850,000 a coin during this cycle. So say the next 5 years. So you got 1,000% return in 5 years, I think is a reasonable expectation for Bitcoin as it achieves parity in market capitalization with gold, which it definitely should because it does everything gold does, but it does it better. And it's been reliable for 5,000 years, and it has recently broken out of a kind of a sideways move. It's very interesting to study the gold market, Jimmy, because the gold price gets suppressed. It hasn't been allowed to really have price discovery, free price discovery for years, and the same thing in the silver market, because it does the Wall Street brokers and bankers don't want gold to do well because it's competition for them. And so they use derivatives to suppress the price of gold and silver. And the way that they do that is every time somebody shows up in the futures market to buy, let's say, $100,000 worth of gold futures contracts, Wall Street will counterfeit and sell $1 million worth of gold futures contract at the market to crash the price. So counterfeiting futures contracts is another counterfeiting scheme. It's called naked short selling. It's technically illegal, but it's widespread. It's one of those things where there's a law in the book, but the law is not enforced. So naked short selling is illegal, but it's done quite regularly. And this has been the way to keep the price of gold and silver down for years. But what's happened is people are so afraid of the inflation genie having come out of the bottle now that they're going to the futures exchange and they're demanding physical delivery. So you can't play that game. You can't sell naked shorts and have the same impact. So the price of gold has been unleashed. It's now finding its true price discovery. So the gold, 3,000, 4,000, 5,000, that's what we're going to see in this cycle. But with Bitcoin, you have, it's built on what are called private keys, and those private keys are held privately. And they're not as subject to manipulation in the futures markets as you would find in the gold market. It's truly decentralized. So you don't have the same risks and problems that you do in the precious metal markets. You do see some of it because volatility equals profit on Wall Street. So if you can create profitability, if you're in Wall Street, you can create a lot of profits. When I was in Hollywood in 1996, I invented a technology called the virtual specialist technology. It's a US patent number 5950176. So you're creating artificial volatility in virtual securities. And we had a virtual currency at that time called the Hollywood dollar. That technology, incidentally, was sold to Cantor Fitzgerald in 2001. And they used it to create artificial volatility in the derivatives market to create profitable trades for them, right? So creating artificial volatility is extremely profitable. And I invented a technology to do that in 1996. And it's still used today. And all the variations on that technology to take trends and to exaggerate them in ways where you, the market maker, can make 10, 20 times the profit of somebody who's just buying and selling, who's not using this technology. And so this is interesting to see the circle come all the way back, because now Howard Lutnick is a big Bitcoin supporter. He's the he's the Commerce Secretary in Washington. And I talked to him, I saw him a few months ago, and we chatted about this, how everything seems to be connected.
Although Bitcoin has dropped 10% so far this year, increasing research indicates that it might be subtly preparing for a huge spike to $155,000. Analysts are comparing Bitcoin's recent behavior to the historic rise of gold, bolstering Max Keiser's long-held assertion that Bitcoin is becoming the digital equivalent of gold and surpassing it in important areas. Both assets are serving as macroeconomic hedges, guarding against market volatility, according to the most recent Glassnode data. After a brief decline, Bitcoin recovered to $85,000, and gold hit a new high of $3,300 an ounce. However, they are more than just short-term price movements. According to Cryptoica, Bitcoin is exhibiting similar technical patterns to the breakout of gold, indicating a similar trajectory. Bitcoin is currently experiencing 30% drawdowns compared to 50% plus crashes in previous cycles. This tenacity indicates that investors are growing increasingly certain that Bitcoin is a trustworthy store of value. As the global M2 money supply expands and the US dollar depreciates, Keiser thinks this change is critical because it will increase investors' concerns about inflation and make them rush for hard assets. The fact that institutional investors contributed to Bitcoin becoming a global neutral reserve asset makes this cycle special. Keiser criticizes naked short selling as a form of market manipulation in gold, but Bitcoin's decentralized structure allows for transparent price discovery. Although money is moving into both assets, growth-oriented investors would be better off with Bitcoin due to its limited supply, programmability, portability, and track record of more than 50% annualized returns. Macroeconomic tailwinds and growing adoption could soon make Bitcoin's historical association with gold the dominant trend. If gold's breakout holds, Bitcoin's historically underwhelming but heightened response could lead to a six-figure run. It could be a maximalist fantasy, or Max Keiser's prediction that Bitcoin could hit $850,000 and overtake the market capitalization of gold. Rather than trailing gold, Bitcoin is set to lead it. Thanks for watching.